Hey, welcome to Sports and Politics with T. I'm your host, Tanya. Tonight we have made it back to Monday, guys. Listen, I hope everybody's enjoyed their week so far. We are already getting into that third week of September. Let's go, y'all. Yes. We're making it through halfway the month of September. Listen, guys, we're going to do a small segment for tonight. We are going to do some things as far as what Black people are feeling about the mortgage market. And what we're hearing in the market so far is that Black people are having a hard time qualifying for mortgages. Okay. And so this is a segment that I kind of wanted to touch on tonight because, the economy is definitely not helping, but there's some statistical data that we want to go ahead and take a look at to see what is the cause for some of this. All right. But anyway, listen, again, I hope everybody's enjoyed their weekend. I actually am going to, I probably won't film this coming Thursday just because I am going out of town. I am heading to the beach, y'all. I got to get me one more vacation before the holiday season begins. So I'm going to be gone for a couple days. But I will resume on Saturday. Now, this past Saturday, we did have a little technical difficulty on the fun and entertainment with T. We did film, however, we had to make a few changes to that. So that's going to be posted on tomorrow. So look for that on Fun and Entertainment with T. All right. Which we talked about different types of subjects as far as relationships. Okay. All right, guys, so let's go ahead and get started. This is going to be a small segment for tonight. It's not going to be a long, drawn-out session. I'm going to let you know how I feel about this. This is, again, talking about the statistics as far as Black people trying to qualify for home mortgages. Once this is over, I'll let you know how I feel about it, and then we'll dissect this video after it's over.
Owning a home is part of the American dream, but the road to home ownership among some Black Americans can be a bumpy one. A new report by the Financial Times finds Black Americans are almost twice as likely to be turned away for financing than their white counterpart with the same income. LendingTree has also looked at the numbers, finding nationwide Black applicants are 1.7% more likely to be denied a mortgage than home buyers of all races. Limited generational wealth, income disparities, and discriminatory practices are just some of the challenges that keep the Black homeownership rate lower than other racial groups. So for more on this, let's bring in John Hope Bryant, founder, chair, and CEO of Operation Hope, founder, chair, and CEO, Bryant Group Enterprises, and best-selling author of Financial Literacy for All. John, thank you for being with us. Always love having you on. When you hear these statistics, what do you think the real issue is with the system reviewing Black applicants and applicants overall?
Well, good being with you tonight. But the real problem is that you don't have an Operation Hope solution across the country yet.
So, embarrassing story, guys. I got hit with a medical bill recently, and I did not have enough money to pay for it. But
that would solve the problem in total right now because we're raising credit scores, lowering debt, increasing savings, making people more approvable. So that's the now answer. The historic answer is the data is right. That you've got a hangover here. You've got a hangover that's 100 years old, really 175 years old, that is tied to a history of discrimination in the country. But when banks were owned by, financial institutions were owned by private families, and a lot of the stuff was done, the government discriminated, FHA, in the early 20th century. So none of that's sort of a surprise. Then you have the fact that basically the formula was created by those who were using the formula, which was mostly back then white Americans. So it wasn't racism per se. It was really, I'm designing something, using something for myself. And then the worst part is that Blacks never got the memo. There was a Freedmen's Bank, 1865, as you know, created by Abraham Lincoln. Teach free slaves about money, financial literacy. He was unfortunately assassinated a month later. The bank drifted and was allowed to fail. And we never got the memo on financial literacy. Today, so one thing the data is not showing today is credit score data. We'll get into that hopefully in our next back and forth. But that's the key. That plus precise ratio. So if you bring in other things like rent statements and utility bills, you get a better picture of the current applicant pool, because in a lot of these communities you don't have prime credit providers. That's where I grew up. You have secondary, you have used car dealerships. You don't have big banks and corporations, and so you're getting bad data. You're not getting good data.
Okay, so that does help paint more of the picture. Now, Financial Times pulled numbers from 2018 and 2023 collected under the Home Mortgage Disclosure Act, a law introduced half a century ago aimed at ending discrimination in the home loan market. But 40 years later, experts say not much has changed, to the point that you were making. So what's your take?
Well, it's lazy capitalism. If you're making money right across the street from you in suburban, wherever you are, why go to underserved any place? Why stress yourself? The problem is that the problem for lazy capitalism is that the country is becoming more and more diverse. Right? My rich friends need my poor friends to do better, if only to stay rich. So you cannot keep this up for another 20 years or another 10 years. We need everybody to rise. You can take no pleasure from the fact of the hole in my end of our boat. And the wealth in home ownership is the number one way you create wealth in America. So black home ownership rate about 44%, last time I checked. White home ownership rate about 75%. The delta, that 30% difference, is a large part of the wealth gap. And it's not that blacks are not qualified. We've been doing so much with so little for so long, we can almost do anything with nothing. But we never were taught financial literacy. And we've had wealth creation opportunities for far less time. It goes back to what I said before about the hangover. I got an antidote for you. It's what Operation Hope does. But the hangover is 175 years advantage, self-dealing, or really self-creation of the formulas, and no updating of the data or the software in the last 30 or 40 years, so you end up with this. The data is correct. But what I'm learning is that Fulton Bank in Pennsylvania, one of our partners, we've done $1.2 billion in home ownership today.
Wow.
For black ownership. Bank of America has done with us, I think my people have told me it's like $40 million are pending applications. A large part of those are being approved. Wells Fargo is doing stuff with us, and I'm showing positive data because we're coaching people, not lowering the standards, increasing the competency. Because half of the black people have a credit score below 620, little known fact, right? So you get we're seeing credit score increases of 54 to 100 points, and that competency kicking in, and people are getting approved. That's $4.5 billion of capital just through Operation Hope work alone. And a lot of these banks, the banks today are publicly traded, not privately owned from 150 years ago. I own the bank stock. You own the bank stock. The bank wants to fund the loans, but who's bridging that to get folks from unqualified to qualified? We are.
And so, John, credit is exactly the thing I wanted to ask you about next, because that's one of the factors in the study. It includes credit score, but how significant of an obstacle is credit score for black applicants? And what can people do if they are, quote, credit invisible, but have the dream of owning a home?
It's everything, Janae. Your credit score, nothing changes your life more than God or love than moving your credit score 120 points. somebody going to the club over the weekend, they see somebody who's attractive, ask them what their credit score is after their name. I'm joking, but I'm serious. It's as important as a 4-year education. And again, we've mapped every zip code by credit score in this country. And I want to actually give experience and credit and thanks for helping us with the data. But it's a Hope index. You can go on my website and put in your zip code. I'll tell you your credit score. We found a 200 point difference, 15 minutes apart.
Oh my God.
In every urban city in America. It's unbelievable. Black and white, by the way, rich and poor, it doesn't matter. What we found is if you live in Chicago, you got Lincoln Heights. I think it's called Lincoln Heights. It's 750, something like that, credit score. You go to Garfield Park, 15 minutes away from that, and it's 500 and some, 580, 600. Atlanta, same thing. LA, same thing. Doesn't matter where it is, right? Seattle, same thing. So you lived at 61 years of age in a 500 credit score neighborhood, 550. You lived at 81 years of age, 15 minutes apart, in a 700 credit score neighborhood. 20-year difference. A 50-point pop in your credit score will increase your lifespan 5 years. And every other thing follows. right? Including ability to access prime credit. Because as you know, Janae, in these 500 credit score neighborhoods, 600, you have check cashers, payday loan lenders, rental stores, title lenders, liquor stores, pawn shops. You live in a 700 credit score community, 15 minutes away. Right. Let's move on. Banks, restaurants. So this is an emerging market opportunity for banks. This is emerging. This is a tax revenue opportunity for the federal government.
And you know what? I'm just going to chime in for just a second. He's right. That is actually very, very important. Credit is so, so, so important. That is my expertise, by the way, because I am a consumer loan officer. And I work in credit, been working in credit for over 23 years. And let me just say this. The main thing is financial literacy and credit literacy. As Black people, we're not taught that. We're not taught that at an early age, whereas our counterparts, white and other races, they're taught at a very, very early age, even coming up as small. But as Black people, we tend to find out later in life. But I do see now more, like he was saying, I'm still seeing more of a trend that more and more younger people, especially Black people, are getting on board a lot sooner than they used to. You know what I'm saying? So, it's so important. Credit affects everything. And your credit score can dictate, where you live, what you drive, and how much money you have. You know what I'm saying? Because of the interest. And so he's right, and I didn't realize, just zip code, people can kind of understand what type of credit score you have just by the zip code. But if you think about it, it makes sense, especially if you go into a very, very rich neighborhood and these homes are, let's say, $500,000 or whatever, they would have to have typically a very, very good score to qualify, and income too. That's another puzzle piece. But this is important, and, one thing that I like as far as where I work is we actually have tools in place to help people build their credit. A lot of banks and credit unions don't offer that, but we do. So, that's one thing I will say, and you're never too old. You're never too young to start. That's why I encourage people to, try to get something started in your name. If you don't have anything, if you don't have a home or anything like that, get you, like a small secured card or something that you can pay on, for at least a year. Something in your name, that can reflect on the credit report on a monthly basis. You know what I'm saying? Because I'm telling you, that can dictate a lot. Even employment, a lot of employers check your credit just to get hired on certain positions. So it's not necessarily to, get a house and a car, but even a job too, So that's why I say credit is so, 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 so very important. And the earlier you start, the better, So, but anyway, let's keep going.
Look at the lack of Black homeownership and the lack of Black approvals as an opportunity, not a problem. Let's look at them as an emerging market. We don't want a handout. We want a handout. Credit scores everything because they got the job, they got the hustle, they got the work ethic. They want to be a homeowner like everybody else. Let's count credit. Let's count the rent statements, like companies like Isuzu who do that, African-owned company, by the way. Let's count utility bills.
Yeah. And John, we're out of time, but real quick, the first thing someone can do if they're looking to improve their credit score.
Consumer debt. The biggest pop. And again, this goes back to historic challenges that you have been building wealth for a short period of time. You have more consumer debt and less stock wealth, ownership wealth. But that is going to count against you the most. Get that under control. Get that down to 30%. You see your credit score pop.
So getting that consumer debt down. John Hope Bryant, thank you so much. Always appreciate having you on. I discovered it.
Yeah, that's so important. That is true. 30% rule for any type of revolving credit cards, line of credit, overdraft lines of credit, or just regular unsecured lines of credit. 30% or less. Okay. The lower you lower those balances, the higher your credit score will be. And also, if you can pay down any type of credit cards or anything that is lingering or consolidate. If you have a lot of credit cards and you can't get a hold of them, try to get a personal loan with a very good interest rate to consolidate all those credit cards into one payment. And that way you won't have so many different type of interest rates and so many different type of payments. And plus it'll raise your score because all your balances will be paid down to zero, but don't close them. And that's what a lot of people don't know is you want to pay them down, but don't close out your credit cards or your lines of credit. All right. But yes, I'm telling you, this was a good educational tool for tonight. So I just wanted to at least go over a few things as far as credit, because that's something that I work in every single day. And I encourage, like I said, to try to get something in your name. Even he hit it right on the head. He was talking about utility bills, and in which we use that as well, rent statements, anything that we can see a payment history, and that's called alternative credit. Okay, that's something that we as loan officers or financial advisors, we look at how well you pay, if you're paying on time, are you paying early, things like that. That helps us make the best decision for you to put you on the right loan product. But yeah, so anyway, this is going to be just a little short educational thing for the Black community and really anyone that's interested in improving themselves, okay? Because home ownership and really any type of ownership, you want to be in control, If you can kind of get something in your name, at least two things. And I always say the rule of thumb is to get at least one credit card and one personal loan, one that's open for 6 months and the second one open for at least 12 months. You'll be in good standing. And also keep that employment as well. We like to see you on the job for at least a year or two. Nothing under 12 months if you can, unless you're in the same line of work. Okay. But anyway, guys, that's just something just to, kind of, glance at and take a look at. And just know that it's never too late to start your credit and to rebuild your credit. All right. All right, so let's give it up for tonight. Yes, this is just a little educational piece for tonight. I just wanted to go over some credit. And I think also, too, the housing market is just not easy right now just because of inflation. The price of homes are just through the roof right now, and there's a shortage of houses as well. So there's a lot of other factors, not just credit, but the inventory of homes is also a huge catalyst. All right. But anyway, guys, I will be back on Monday of next week. Like I said, I'm going to be off from Thursday all the way to Monday because I'm going out of town. I'm going to the beach with some friends and family, and we're just going to, be there for a few days. So I won't be, I'll be traveling on Thursday night, and that's usually when I'm doing my second show for the week. Okay. But I won't be doing it this week. I'll be back on next Monday. All right. All right, guys. So if you enjoyed the content, please hit like, share, and subscribe. And also, if you can, please hit the notification bell. That way you won't miss any episodes every time I come on to YouTube. All right. All right, guys. All right. I will see everybody at 8 p.m. on Monday. Everybody enjoy the rest of your week, and I will talk to you soon. Take care. Bye-bye.